Are we at the cusp of a major crypto move? You can see here by the crypto bubbles chart that a whole lot of the coins are already red on the daily. So it's the start of a new week and prices are selling off to the downside. On today's show, I'm going to outline to you both the short, the medium and the high time frames, whether the next bounce that takes place is going to lead to a lower high and continuation to the downside, or is this a buy the dip opportunity? Well, let's cover this and a whole lot more into the stream, and we'll get started over here. Are we live? Let's just quickly double check. We thought we were live just now, but we weren't. Okay, I see D says always late. I really apologize, guys. We are experimenting with new streaming software, 4K software. I went live again for about 10 minutes and we weren't actually live. So here we are. Okay, cool. Let me just quickly open that one up. Grab that again. So one of the things going on in the market at the moment, I'm sure some of you may or may not have heard, is the Bitcoin miners right now. So absolutely printing. You'll see the Bitcoin hash rate is going through the roof. And one of the reasons is because of the ordinals which are taking place. So the NFTs, which are of course the NFTs on the Bitcoin blockchain as opposed to on the Ethereum blockchain. So miners right now getting over 10 Bitcoin per block mine. Transaction fees alone are over 4 Bitcoin per block, which is absolutely enormous. And if you have a look over here, take a look at that. That is just the Bitcoin fees over the past day, which is from mints. 45% of all fees have been because of mints. And that's led to a little bit of fear within the market with Binance stopping withdrawals because they didn't anticipate the fees. And now that's spreading fear. And one of the reasons that prices may be selling off. So here you have Binance experiencing the largest withdrawal volume in its history after resuming Bitcoin withdrawals. 160,000 Bitcoin has left the exchange, which is worth over 4.5 billion. So definitely Binance is one of those exchanges that have been absolutely battle tested left, right and center throughout the prior cycle, at least this past year, with a lot of FUD on their side. And will they survive this one? This is ultimately the biggest withdrawals they've ever experienced. And they came to address it over here. They said, well, we've temporarily closed withdrawals due to the large volume of pending transactions. Our team is currently working on a fix and will reopen BTC withdrawals as soon as possible. Rest assured that the funds are safe. And here you have it. Binance says there is a large volume of withdrawal transactions from Binance still pending, as our set fees did not anticipate the recent surge in Bitcoin network gas fees. Our team is working to accelerate the confirmation of all pending transactions. We'll provide updates here. So a lot of uncertainty within the market, all caused because of the degens with their NFTs. Here you can have a look at the Bitcoin transaction fees as per Colin. He says that you need to spend at least $1,810 to make a transaction fee of only 1%. And you must spend at least $3,620 to make a transaction with a fee of only 0.5%. So very heavy fees on Bitcoin at the moment. And have a look over here. By Glassnode, they're experiencing high demand for block space driven by those BRC20 tokens utilizing text-based inscriptions and ordinals. And there you can see the massive uptick which took place over there. So ordinals, here they are. Let's quickly click on this one over here. Ordinal fees have been surging. If you do want to learn more about ordinals, I recommend have a look at this tweet thread from Fast Life. I won't go through the whole thread because I know not everybody is interested in these ordinals, especially with such high gas fees. But if you are somebody that wants to find out more about it, go through to this. I will retweet it. He shows you exactly how you can buy them and the ones which are in most demand. So the Audis are the ones that were first released. I don't know if he has that listed in here, but look out for the Audis. Those will forever go down in history as the very first NFTs on the Bitcoin blockchain. So a little bit of degening for you over there. Price action wise though, what's going on? Let's look at the quarterly levels. You can still see that we capped below a key quarterly level on Bitcoin. That key level is coming in at 28,993. So anything that's underneath that is definitely a little bit of risk towards the downside because this candle could obviously expand a lot lower. And we were always treating this price action into this zone. So what do I mean by this zone? The zone between 28,993 and the zone at 35,061. So this area over here was where we were looking for the relief rally to potentially find some sort of resistance and possibly come back down from that level. So is that what's taking place? Well, we'll have to wait and see. It's a long time for this candle to still play out. This is quarterly, so 1 month and 23 days. Where's Ethereum? Ethereum is also capped below its key quarterly, which was also the 0.618 retracement level, coming in at 1,914. So risk does remain to the downside as long as price action remains below these levels. You'll see how that lines up with pivot levels, which I'll show you on the daily chart as well. All right, looking at the 7, the 20, and the 50 MA, the moving average on the monthly chart. Also, the 20 MA is constantly moving down with each passing month. So you can expect that this is going to be resistance coming in around the recent highs at 31,460 as another level to watch. Support zones, the support levels that we're watching is going to be based off the 21 and the 200 EMA, which is coming in right over here in the sweet spot at 25,000. If you do see continuation to the downside and nothing has changed on the high time frames based on what I showed you guys last week, you'll be looking for that as a very, very good buy the dip level. Failure to hold this level though means that you're going much lower, potentially around that 21,600 zone. Now there are some high impact economic events which are going to be coming out this week. The most important one that I'll be focusing on is coming up on Wednesday, so that's May the 10th, and that's going to be the CPI month on month and year on year data. And the reason that's so important is that will give us an indication whether there's a possibility that there's going to be an uptick in the inflation. If there is an uptick in the inflation, we know that the Fed are obviously going to be losing control, and therefore they're going to be looking to raise interest rates at their next interest rate hike, which is coming up in June. So keep an eye on that information. Ultimately, that will drive markets. This information is important because we're in a period where the markets are incredibly illiquid. There's a lack of liquidity in both traditional markets as well as the crypto markets, and you can see that when you look at the charts. I'll bring up the liquidity chart in a moment. Let's quickly find it over here. Here's the liquidity chart. You can see the lack of liquidity within the markets. Everything has completely fallen off of a cliff. And basically, that's why it takes very, very little volume to move the markets either up or down. So if short sellers step in, I actually saw something that came out, I think it was JP Morgan, which said that they want to put a ban on the stock markets over the coming weeks when it comes to shorting the market, stopping market participants from profiting on the market moving to the downside, which is quite crazy. It just shows you how low the liquidity is at the moment. Okay, 4-day chart over here, levels of interest. So we really caught absolutely slap bang in the middle of our interest zones. Why is that? Because at the bottom end over here, we have a high time frame moving average coming in around that $25,000 level. That's going to be an area of support. We're starting to lose the short and the medium time frame moving averages, which is the yellow and the green. If we did reclaim that, remember the upside target, which still remains, even it's just a question of which side we go to first. Do we sweep down here, set in a high low, and then move back up? But ultimately, I'm still looking for that $32,000 to $33,000 level to get tagged at some point in the near future. All right, Bitcoin in its rising channel over here. So we got the parallel channel. You can see the way that price action has been respecting this level over here. And then identified for you guys last week, we said, look, there is still the divergence which has taken place with the RSI moving towards the downside. Zooming in, I said the way that I'd play it is like this. Once we started to lose the mid-level of that rising channel, then you are looking for potential downside price action. And I said you can put in a secondary channel. I told you this is typically how I would trade when I go look on the low time frames. I would draw this out, zoom in, and it's semi following this picture. As long as you continue to remain here, you have double confluence, it's your mid-level, and you have the top of the new channel there. And ultimately, I would be expecting price to slowly but surely move back down towards this region over here. Again, coming in at about that $25,000 level, which should provide quite a lot of support because it matches up with the bottom of the rising channel as well as the bottom of the declining channel. So double confluence over there for you. That's an area of interest.
Dudes?
Yes, James is calling me.
There's going to be a fire alarm.
Oh, guys, we're going to have a fire alarm in 2 minutes. Okay, I'm going to go very quickly. I really apologize. The fire alarm is a disaster. We will not be able to continue with the stream as soon as that starts. So very, very quickly, you have your pivot level over here. Pivot level is coming in at $28,837. Price is capped below that. As long as it remains below that, expect continuation to the downside. Again, support levels coming in around that 200 MA, 24,000. And then we know the previous range high at 25.5. I'm going to quickly shoot through to what's important, which is the lower time frames. Let me just quickly find it over here, because the stream will be cut short. Here you go, 4-hour chart, breaking below, or at least out of the symmetrical triangle, stuck below the 200 and the 50 EMA, which means price is going to be capped towards the downside. As long as we're below those, there is additional pressure. That lining up with also, you got your 9 and your 18 exponential moving average on the daily, will start to cross down if price can't get back above that. Let's quickly go through to this tweet over here, or excuse me, not the tweet. I want to go through to the price action on the 4-hour chart. So this is ultimately what I'm looking for. Everything has been driven by liquidity. We outlined on the prior show that we had 25x short liquidation levels plus the volume point of control was all coming around this region. We moved up, captured that liquidity, and then once you broke this trend line down, it was an activation for a short trade, moving down to the bottom liquidity zone. That liquidity level is coming in at 27,230. So I'm looking for that to be a bounce zone. If you see price action move down into this level and then come back up and hold, you have your swing failure pattern, your activation for a long trade, and you can target all the way back to the top, potentially even above this liquidity zone. So it was always a question of which side gets tagged first, this liquidity or the liquidity above 30,000. So far, it's looking again like we're moving closer towards the bottom. That lines up. If you look on High Block Capital, I've got the 7-day look back phase, which is looking at the heat maps. Where does the liquidity lie? Here you can see it's all here. All this heat mapped area is where a lot of people's orders were set previously, or where people get stopped out of their positions. And in an illiquid market, you want to target the liquidity. So here's your liquidity. It lines up around that 27.5 and potentially even up to 27,850. Look over here, you can see that short sellers are starting to step into the market. You want to look for the negative funding rates to continue towards the downside over here to show a bigger red print, showing that shorts are now starting to chase the price action. Whilst they chase price into this level, I'll then be looking to fade them. Those shorts are going to get taken out of their positions. Price action is then going to start to shoot up very quickly after that. And that's ultimately, in a nutshell, what I'm looking for. I'll keep going until such time as this fire alarm goes off. Today's show is a disaster. Please make sure you smash the like button and give it a comment to help the content get out there. We're definitely going to be punished by the algorithm for cutting things short and the way everything's panned out. I also wanted to mention the trading competition. Check out the trading competition. First place, you can win $40,000. Second place is $20,000 or Rolex. And third place prize is going to be $10,000. To sign up, all you need to do is click on the link in the description below. Make sure first you have a link or an account, at least with ByBit. Sign up using my link below, deposit $250, and then enter into that trading competition. It's going to be running for another 23 days. You have plenty of time based on the upcoming volatility in which you can potentially win this event. All right, I wanted to touch on one or two other things whilst we wait in case this fire alarm goes off. The other things I wanted to look at was the NFTs, or excuse me, not the NFTs, the meme coins, which we previously mentioned, one of which was Bob. So here you have Eon, he says, a negative 50% dip just happened on Bob. I wouldn't call that a dip, but anyways, last time a negative 50% dip happened, the chart broke out and went up 600% plus. Can see the same pattern forming again, negative 50% dip followed by 600% plus breakout. And then he said, it would be helpful if BTC can just stay above the monthly open. I want to go through to my Twitter over here. just to show you, I said, here we go. Previously, I took a position on MONG about 30-ish hours ago and a position on BOB about 20 hours ago. I doubled my money on both of those. Gas fees are very high, so be very careful. Definitely getting heated. Also, don't get stuck in positions because of the fees are too high, right? You don't want to take a $50 position in a coin and then pay $50 on gas fees. Ultimately, as the price of that coin goes up, typically the market gets heated and the price of the gas fees also go up. The ratio rarely changes. So let's say you bought $50 in the coin, $50 in gas fees, and then that coin goes up to $200. The gas fee is probably also going to be $200. Therefore, you get trapped. So I wrote here, I transferred those funds to centralized exchanges since both MONG and the BOB got listed on a centralized exchange. And then I said I removed my initial capital plus the fees that I'd paid in gas. And if a moonshot now happens, it happens. That's my recommendation when it comes to playing these meme coins. You need to get in early enough. As soon as you double or triple, take your money out because it moves quick, right? Take your money out. Only play with money you can afford to lose, and then leave the rest to run. So if we have a look at some of these, here's BOB. You can look at the chart. Ultimately, it's been a big move up. Now we need to see, the question is what happens next, right? So if you had quite a big sell-off over here, let's just grab the drawing tool. You want to be watching very carefully. If price moves up over here and starts to turn back over, then you can say, well, what does this look like, right? The Wall Street cheat sheet. Then you have your blow off top, you have your complacency bounce, and then ultimately it will go much lower over time. Or it could be exactly what the previous guy said. This could just be a temporary dip, reaccumulation, and it could continue on to the upside. The point is, by now, you've taken your initial capital out. Anything that you have left in the market is free to run. What about MONG? Let's click on MONG over here. Mongoose coin. Mongoose coin looks, it's exactly the same thing, right? So if you look over here, be careful that this is not the blow off top and price is going to move up over here. Complacency bounce, watch for that area. I'm not even going to read out the numbers. There's too many zeros. Just look at the image that I'm showing. Watch, there's not going to be a complacency and price is going to come all the way down. Remember, we got in down here. This is where I gave this call in the purple zone, was where I gave it. The same thing for BOB. I also gave it in the purple box area. Let's quickly pull that up again. Once we dip down into this region, you had a massive move up. So this is my watch list. These are the coins that I'm watching as per the meme coins. And let me know in the comments, do you think that the meme coins are the beginning of a new cycle? Or is this just the end and the end of the relief rally and we're going to go down much lower? I'd love to know your thoughts. Cool. Is there anything else? Let's quickly see. RENKO. I wanted to show you RENKO. Yes, RENKO is printed a full red and reversal candle over here. Expect a little bit further downside and continuation from this. We'll be patient and wait to see when this gets us back into the market. But it was all expected, right? Price coming into horizontal resistance. This was the underside resistance, similar to what I showed you on the weekly chart, where we were looking to fade price action from anywhere within this region. So it may already be turning over. Be very careful. Wait for the pivot levels to be taken back over. The VIX is also contracted to incredibly low levels. That lining up with the stock market coming into range high. This is going to be an interesting zone to contend with. I expect, let's see, we might either break through it or properly reject off the zone come Wednesday with those inflation data results which are coming out. All right, guys, I'm going to end the stream peacefully over here without screaming alarms in your face. The fire alarms, it's just a drill that they run once a month. So I do apologize for the inconvenience. Thank you all for watching. I appreciate each and every one of you, and I will see you all on tomorrow's stream. Cheers for now.